All right, so we are now continuing with this kind of question. Okay. Okay, so now we are getting down to the parameter now where we are looking at Chibom. A company received a check from Chibombo, of which we have actually sorted out Chibombo in this case here, 70,000 from the sales credit that we made to them. Uh, Okay, not bills by bank. So the bank account received. So the bank account was on in debit. All right. So meaning that we received a 70,000 kwacha. So the question says company received a 70,000 check from Chwombo, 70,000 kwacha. It was paid in the bank account on 20th. So we need to debit the bank. Okay, so we debit the bank on 20/01/15 to Wombo. So we debit this bank by 70,000. All right, then we getting down to the other aspect of the question here, where it says, so this one is finished, all these are transaction are done. And we're getting down to the company settled Toyota Zambia on 21 January. So let's go to Toyota Zambia. We sorted by check. Toyota Zambia by check. So let's check the Toyota Zambia. We sorted by check. Okay, so 21, meaning here we're going to put 21 01 15 Toyota Zambia. What did we do to Toyota Zambia? We go and check what we did to Toyota Zambia. You bought a van, 40,000. So we paid them 40,000. So we come to Toyota Zambia, 21/01/15. My bank, we paid these people their 40,000. Okay? We paid them their 40,000. So 40,000 was paid to Toyota Zambia. All right, so that one goes. We now go to another aspect. The company sent a check to Kawa Limited for 34,000 on 24th January. 34,000 Kawa Limited. The check was sent. We go and check Kawa Limited. Kawa Limited. Okay. It was on 24th 01/15. They received that 4,000 check. This come from the bank. So we go to the bank. Bank. we say 24, 01, 15, 24,000 was actually given Carwell. Alright, then we move on. The company purchase goods from Mr. Solomon from Cabo Limited, 31 January 2015. Purchases, 50,000. Go to purchases account, 31 January 0115. Come from Cabo, 50,000. Okay, we go to Cabo Limited now. So Cabo Limited, let's check the Cabo Limited. 810115. We have purchases. Okay, so we have what we call purchases. The purchases were 50,000. Okay, so we move on now. So this one goes. On the first January, the company made cash sales of 60,000. So cash on the sales. Cash sales. So we go to the sales account. Let's check the sales account and the cash account. Okay, so 810115. So sales. All right, so we have this is on. All right, 810115. So the sales were 60,000 on cash. So the sales in this case were 60,000 in cash. Yeah, cash sales were 60,000. Okay, when we go to the sales account. So the account 1, no 115 went to cash. The cash account was 60,000. This is this is where the double entry system is. So in accounting, the double entry system comes in this way. Okay, so now we have these accounts. So we need to start balancing of the accounts. All right, so there's a requirement that we need to enter the transaction in the appropriate ledger accounts. And after entering the in the appropriate ledger accounts, the other aspect is where we need to now start balancing of the accounts. After balancing of the accounts, we need now to prepare what we call the double entry system. All right, so double entry system checks the accuracy or the trial balance actually checks the accuracy of the double entry system. So we can now start balancing of the accounts. Okay. Okay, so there is now an aspect where we need to start balancing of the accounts. So meaning this one, we are going to have the aspect of 80,000, 80 plus 60 is 140,000. Then here also 140,000. So we have the balance cut it down is 140,000. The balance brought down is 140,000. Then we come to Chivombo. We are going to check the accuracy of the double entry system here. So it's 80,000 on this end, 80,000 on the other end. The carried down balance is 10,000. The brought down balance is 10,000. That one goes to one more account. Then we go into the shop expenses account. So it's a 1.5 here and the 1.5 here. The carried down is 1.5. The brought down is 1.5. Then we move on to the couple limited. We itemize who they are. So this is the 44 plus 50 is 94, 94,000. Then here also put the larger figure, which is 94,000 is 60,000. So cut it down is 60,000. Brought down here is 60,000. Then the purchases account, we have 44 plus 50 is 94,000. 94,000. Cut it down is 94,000. Then brought down is 94,000. That balance offs. Then here we have the shop expenses. Cut it down is 3,000. Okay, and then we have the brought down of 3,000. Then the Toyota Zambia, all right, so this account was closed, 40,000 was paid off, even here, the 40,000 was paid off. So it was a closed account. The van, we are now balancing off accounts, very interesting balancing off accounts, 40,000, 40,000, all right? So 40,000, 40,000. The current down balance is 40,000. Then the brought down is 40,000. Then we go into the bank account. For the bank account, you need to check 145 plus 70, 145,000 plus 70,000 plus 70, 210,000. So 210,000, which is 210,000. So I'll cut it down, which is the balancing figure. So let's check what is happening here. Okay, 210 minus 40,000 minus 84,000 minus 15 minus 3,000. 131,500. So 131,500. So our brought down will be 131,500. Okay. So this is about what we have. Then getting down to the capital account is 160,000. Then also we have 160,000. When you cut it down, it's 160,000. Brought down is 160,000. All right, on the cash account, we have to balance off the account for cash. So 160 plus 60 is 220,000. We have also a 220,000. So I'll cut it down. It will be 75,000. So our brought down will be 75,000. So the balance brought down balances are excess balances that we need to actually look at. Those are what we call the excess balances. So brought down is 25,000. Okay? So here you're going to have is 25,000. That is what we have on the cash account. and that double entry system. So we have balance of all these accounts. So we check for what is going on. So Cabo Limited, this is our creditor. Our Cabo Limited, this is our creditor. What is Cabo Limited, our creditor? We actually, from here, okay, we bought on credit from Cabo Limited. That's why they are our creditor. Creditors are people where we are buying goods from. So we have balance of all the accounts. So Chivombo is our debtor because we sold goods on credit to Chivombo. So now we go and look at the trial balance. So the trial balance checks the accuracy of the double entry system. So trial balance checks, also checks accuracy of double entry system. Okay, so that is what a trial balance does. Okay, so this company, Monze Enterprise trial balance. So we are going to have now, you can go to another page, Monze Enterprise. Trial balance. Okay, the trial balance as at, okay, so it was at the first January 2015. So you should have what we call a debit and a credit. All right, so we can start from whichever way we would want to go for. The first aspect that we need to know or start with is the four values that we have. So we can start from the where we started from. The first one is on cash. Cash has what balance? Debit, 75,000. Capital has credit, brought down balance of 160,000. Then bank has what? Debit of 131,500. Van, a van has 40,000. Then shop premises at 3,000 debit, purchases 94,000 debit, carway as 90. Okay, it's actually 60,000 credit. These are creditors. Then getting down to shop expenses as an expense in accounts. Shop expenses as 1,500 debit. Sales as actually 140,000 credit balance. Chivombo. Chivombo is our data. We have actually for Chivombo we have okay, we have actually a 10,000 culture debit. Okay, a 10,000 culture debit for Chivombo. So this is just about what is happening. Now, when you are coming up to do a double entry system, we need to reconcile the books of accounts now. As we do a reconciliation, we can start with the first one, doesn't matter the order. So cash, we have a 7,500 debit balance. Then we have capital. So our capital, what do we have for capital? Our capital is 160,000. Then we have the bank. The bank we have 131,500. That is on the aspect of um the bank. So the bank has 131,500. So 131,500, that's the bank account. Then we have the van being an asset. The van is 40,000. So van is 40,000. Then we have shop premises. So our shop premises, okay, shop premises, that is also an asset as well. Okay, so the shop premises, we are talking about having a debit balance of a 3,000 kwacha. That is on the shop premises, as you can see from my whiteboard. So it's a 3,000 kwacha here. Then we have the purchases figure. Purchases is 94,000. We have carway. Carway already we uh, determined that these guys are our. So carway, we said these ones are our creditors. We are owing them with 60,000. That's how much we're owing them as Carway Limited. So this is the 60,000 kwacha that we are owing them. Should be on the credit side. Then we have shop expenses. So shop expenses taken away from the benefit from the accounting business. We have shop expenses of 1,500. Then we have the sales So sales is we check out our sales value. Sales value, we can itemize and check the value that we have for the sales. Okay. So for the sales, we have actually gotten the 140,000. So sales is 140,000. Then we have Chubombo. Chubombo is 10,000. These guys are our debtors. So we can now balance off. We can just now do the final trial balancing. So 160,000 plus 60,000 plus 140,000. Okay. 160,000 plus 60,000. Then plus 140,000. 360,000. Then here we have cash is 25. Let's check our cash book. We go to our cash. Our cash book, we have what? That is 25,000. That was our cash. So cash is 25,000. Okay, so Abu, 25,000 cash plus 131,500 plus 40,000 plus 3,000 plus 94,000 plus a 1,500 plus a 10,000. Okay, so this is actually giving us the total balance of 360,000. So the double entry system is actually reconciled. Okay, so adding these values properly for all the debits and the credits, we are getting the reconciled amount of okay, 360,000 kwacha. That is on total debits and the total credits. All right, for the van at 40,000, of course, we have the values here. Okay, so the actual figure for the cash here, as we do the total figures for the cash, the actual figures for the cash, we are talking about how much we generated as cash revenue from the operations on this business is actually 215,000. So 215,000. As we add, so 215,000. So the carried down amount for cash. Okay, so we have the carried down amount for cash uh, is actually all right. So we consider the amount we are removing from this kind of arrangement. We are simply saying that the value is okay. So to 15,000 So 215,000 minus 34,000 minus 40,000 minus the 1,500 minus the 3,000. So we are getting 165,500. Okay, so that balance carry is 136,500, which will also be here 136,500. So this is what we have here for cash. As we come to the trial balance now, 136,500 for cash, because this is the amount we are reconciling for the this is for the bank account. That is for the bank account reconciliation, we are getting bank 136,500. So on the bank here, we are getting 136,500. 136,500. So as we add the values now, 13500 plus 25,000 plus 40,000 plus 3,000 plus 94,000 plus the 1,500. Okay, so we can start from there. 25,000 plus 136,500 plus the 40,000 plus the 3,000 plus 94,000 plus the 1,500 plus the 10,000. It's giving us 360,000. So the trial balance was balanced. Okay. The trial balance is reconciled. Okay, so we can end here for now. And this recording will be shared. Okay. All right then.